Hello and welcome to this week's show. Well, Australia's first integrated, entirely paperless and AI-powered commercial lending platform designed for both brokers and borrowers has been launched. It's called LendFlow, developed by commercial lender Global Capital Commercial. It gives borrowers access to loans by investment banks, private lenders and high net worth investors, as well as banks and non-banks. Andrew West and Bill Salouris joined me from Global Capital. Gentlemen, thank you very much for your time. Bill, I hope I got your name right there, did I?
Yeah, no, that's good. Bill Salouris. Yeah.
Good, excellent. Andrew, Bill, welcome to the show. Can I just ask firstly about the company, Global Capital? It's been around, I believe, for some time, but it'd be fair to say, I think, that a lot of our audience probably are not familiar with the company. Where do you fit into the lending landscape?
Okay, so Global Capital Commercial's specialist commercial finance brokers. So we've been around since 2001. Predominantly, we're a broker-to-broker business. So your typical home loan brokers who perhaps don't have the same level of experience or access to funders for a commercial scale would then refer their clients or their deals to Global Capital. We would partner with them, find a solution, and then settle the deal for their clients.
So to be fair to say that while you work with a lot of lenders, and I'll ask you in just a moment how many there are, you're obviously a tool that works at the back end. So most consumers probably wouldn't be too aware of the company. Is that fair comment, Andrew?
I think we're becoming much more popular now, much more well known now. Probably 30-40% of our business would be direct consumer or business clients, substantially, who would make contact with us, and that's through various methods, typically through the internet, web chat, that sort of thing.
Yeah. Technology's been a wonderful thing. It's opened up so many more opportunities for all of us, and business models like yours as well. Andrew, staying with you just for a moment, because the platform itself works across lots of loan types, commercial, development and residential, as I understand it, also self-managed superannuation funds. How many lenders are actually on offer?
We would have around 450 lenders that we would deal with. That'd be Australia-wide, and obviously that's from banks and super funds through to private investor types and small lending firms.
Bill, is it available only to brokers?
Look, it's been, as far as the technology to be a tool, it's there for the brokers to assist them with their clients. There's also a borrower portal, and the borrower portal is really for the application form, to digitise the commercial application form. As far as we know, it's the first truly digitised commercial application form in the world that we've ever seen. So we've never come across it. So that's the part for the borrower, yeah.
I want to talk to you about AI in just a moment, but has AI allowed you to develop that niche?
Well, the commercial application form is something that we've been working on for a while. I'm going to say there's more moving parts. So, for instance, we could be talking about a shopping centre with 15 tenancies or 50 tenancies. We could be talking about 5 companies, different corporate structures, all interrelated. So the technology can compile all that in one simple process while you're talking to the client. So when you're asking the customer for information, it's only asked once. There's no need to go toing and froing because it brings it all together.
The claim from the company, Bill, staying with you for a moment, the claim from the company is that it's going to boost loan approvals by 500%. That's a bold claim. Why will it have so much impact?
What it's doing, that's with the AI pricing engine. So what it's doing for us, and we've been using it internally for a while with Andrew and the other business units, is it basically goes through all those lenders. Each one of those lenders has got different products. There's pricing for those products are different pricing for an SMSF phone loan compared to a construction loan, compared to a commercial. They're all different products with different pricing. And in commercial sphere, they're all moving targets. They all price to risk. So they don't say, here's the rate. They just say, we'll price it to risk. What the AI does is it predicts the pricing, and we're at about 98%. So when when Global Capital is issuing a quote, it's pretty much accurate. It's about 98%. It's what it's been proven over the last I think 11 months that it's been in action.
So really, this is about speed, is it? And access to a lot more material?
It's speed, it's consistency of accurate pricing, So we can, I mean,
It's also targeting the correct lender as well. So your clients, typically your clients are initially thinking banks, and whereas their proposal may not fit a bank's policy. So by being able to pinpoint the specific funder for those clients, you're targeting someone that's already has an interest, and you know it's within their policy parameters. Hence, it's become a more efficient process. So you're getting your approvals in a speedier time and more successful.
Because the landscape is changing all the time, isn't it? I mean, the restrictions from lenders and how they structure their business. With 450 lenders, that's got to be a nightmare. No one broker could look after that amount of complexity. Is that another reason why this is so fast?
Well, there's part of that, but I mean that's part of the global capital business model. Because it was a broker-to-broker business model, typically they were referring deals that they typically couldn't do. So it's evolved into a machine that has the ability to do the outside the square transactions, and that's been necessity, because that's the sort of transactions. And what the IT has been built to assist exactly that, to make it faster, more efficient, and more consistent. So it can give us the tools to be able to price better for our customers, and allow us to spend more time talking to the customers and getting to know them.
There are, of course, other models available, but how is LendFlow different?
When you say there are other models, I think you'll find that all the models are there for personal loans, a lot for residential loans, but none of them are talking construction, none of them are talking commercial, none of them are talking the more complex moving parts. I mean, we know a lot have tried, but as far as we know, and we're talking in the world, no one has done anything like this successfully.
Well, of course, you touched on a point there that I wanted to raise, and that's about the complexity of the commercial lending. It is a lot more complex. It's a lot more involved. That must have been really difficult for you to allow for that. And has that given you the edge, the niche, do you think?
Well, look, we do, because I mean, this is, I mean, for us, it's what we do every day. So we're used to having the average customer with maybe 2 or 3 companies that are interrelated. We're used to trusts and all these. So the real challenge was initially mapping all that out and trying to capture all those moving parts, which we, from what we've seen and what we've tested so far, it's handling all those moving parts, and it's doing it successfully.
Andrew, the Banking Royal Commission, its final report has made business really tough for brokers and for lending generally. What do you think is going to be the impact of that going forward, and will that have a negative impact on your business model?
Look, to be fair, I don't think it will have a huge impact on our business model, insofar as there is commercial. It's more geared towards the consumer type lending. We've seen an upsurge in inquiries and in business of late, probably related to that, because a lot of people have assumed that the banks won't lend to them and cannot lend to them. I don't see it as anything. I think there's more opportunity for us with our software as well. It enables us to be responsive and enables us to give clients an indication of where we see their pricing, their funding costs sitting, so it enables them to then make a business decision based on that. But I don't think it's going to have a huge impact on our business, because we're predominantly commercial based. I would say that the home loan brokers, I know that it will have a bigger impact on them, and a lot of those people are concerned.
Yeah. It seems to me that lending is becoming a lot more complex, and when we see the rollout of the Royal Commission final report, it's probably going to make it even more difficult, particularly for brokers. Do you see the balance of borrowing moving a lot? In other words, do you think investors are going to be looking more at a commercial portfolio as opposed to a residential portfolio, because lending might be a little bit easier?
Look, I think, to be fair, I think it's good business sense to have a mix in your investment portfolio anyway, with commercial properties typically giving you a better return, maybe not the capital appreciation. So I'm not sure whether it will, whether there'll be, because of the Royal Commission, that will occur, or whether people will just think more and get better advice. But certainly, commercial properties are making sense. The residential markets hit a downturn regardless, and so I think we'll see more.
A lot of our the customers that we see through, they've got larger property portfolios. There's generally a mix between commercial and residential. It's typically never all residential. There's a mix, and I think the savvy investor wants to diversify. If they like property, diversify with some commercial property. Longer leases, good returns, and stable returns.
Because we're hearing from brokers, and admittedly these are not necessarily commercial brokers or experienced in commercial lending, they're more residential. They're finding that a lot of their applications are just not, the fall off in application approvals has been quite dramatic. Do you think that's short term, or do you think it will change? Because the banks are sort of, I guess, easing up a little bit, aren't they? We had an indication just last week that one of the major banks was easing up on its lending to investors. Do you think it'll change?
That's an interesting question. They're easing up on investors. I think more residential investors. I don't know. I'm not across, to be fair, the impacts from a residential lending perspective. I think that probably property prices have dropped back a little bit. Returns in a residential space probably have now or yields have increased simply because the rates have dropped a bit. So I don't know whether the Royal Commission or the bank's lending is going to necessarily impact on the level of borrowing. I think it's impacted a bit on.
I'd like to just add in there, like, we've been doing this for a long time, and markets go through cycles, and banks have tightened up before. And they've expanded lending again, and these things go in cycles. We're certainly not expecting low interest rates to last forever. We don't expect contraction of lending to last forever. It's a cycle. So we're in a cycle at the moment where, look, they have tightened up because there wasn't this surge in price growth, which is there. There's got to be a point where banks are in the business of lending money. So in order to increase their business, they've got to lend more money. It's what they're built on.
Makes a lot of sense, Bill. And on that note, I think we'll say farewell, gentlemen. Thank you very much. All the best with what you're doing. I think it's a great tool and it deserves to be very successful. Bill and Andrew, thanks very much for your time.
Thank you very much. It's been a pleasure.
Thank you, Kevin.
Cheers, mate.